Hello, everybody, and welcome to DeFi Ask Me Anything with Hugh. Last month, as we started the first cohort of the DeFi and Risk Learning Group, our cohort participants asked some interesting questions on Nexus Mutual Forum. You may find them at forum.nexusmutual.io, and when you go to the top right to the search function and type DeFi AMA. If you have any further questions, please make sure to post them. We will be doing another round of DeFi AMAs with further team members, but for now, we'll get things started with you. We're gonna go one by one. I am simply mirroring my tab here, and we have about 15 users posting their questions, but the questions are a bit long. We'll see how much of them we'll cover in the next 45 minutes or so, and continue with the rest of the questions in another episode of the DeFi AMA. You're welcome. Before we start, any notes, or should we just dive in?
No, cool. Thanks for having me on, Tim. No, lots of really good questions. So I'm keen to get stuck in. I'll try and summarize some of them, and some of them are quite deep, but we'll go into them as much as possible.
Thank you, and also thanks for doing this. I think it's 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 probably going to be packed with a lot of insights. So I'm already looking forward to your answers. Okay, let's start with Jack's questions. The first question that he asks is about the risks of trading real world assets on chain.
Yeah, so I think there's a bunch of things to consider here. The first thing is kind of the technical risk of the smart contracts failing, which is kind of like, I guess, a relatively well-known risk now. It's also one of the key things that Nexus covers, but that's kind of one aspect. And then the other main aspect is when you're trading real-world assets, essentially you tokenize something off-chain, and the only way you can really kind of tokenize that appropriately is through kind of legal agreements in general, or a trust of a centralized entity. And so really what you're doing is you're using the trading capabilities of the blockchain world, but it's really underpinned by the legal or custody situation of the off-chain assets. So the smart contract layer, it can definitely be covered, etc. But it's probably, depending on the real world asset, it really depends on how it's set up, what the custody is, how clear the legal arrangements are, and that type of thing. So that's kind of the general risks there. For example, with USDC, you're effectively trusting Circle to manage assets and have enough backing for the USDC that it mints. And for other things like, I don't know, someone might tokenize real estate on the blockchain or something, in which case what rights do the token holders actually have in the legal contracts of that the real estate that's backed. And so those are the types of things to consider. In terms of the next one, and kind of delving into this in a bit more detail, like more generally, like what does traditional finance adopting blockchain technology, what risks does it face? I think one of the things in general there is it kind of comes back to this legal centralization issue. You kind of in a hybrid world where you've got some centralization aspects, and then you've got the kind of trading and tokenization running on the blockchain aspect. So you've got kind of two sides to the thing, and so that's quite fine. Like if people want to participate in that, it's going to be hard to make it fully decentralized, and that's perhaps impossible in a lot of these real world asset type things. But if we're talking about, I guess, TradFi and more general adopting the technology, that to me they're just another user base, and so I don't necessarily think in and of itself there's a threat to decentralization. The threat can really happen where you've got one or a few assets that are really large that are effectively centralized, like USDC or USDT Tether. Something like that could pose some decentralization risk. For example, if there's a contentious fork of the underlying blockchain and you have to kind of choose which fork or which branch of the fork to take, then effectively, because you have a centralized entity controlling the real assets off chain, they're the ones that could influence the fork choice. And so to the extent that there's only a few of those parties, they could effectively provide us, contribute to a centralizing force. And I think you kind of see that now. Like if there was a contentious fork in Ethereum, then and Circle decided to make a forced choice about which one it wanted rather than just passively seeing what played out, then they could influence the choice, because assets on one side of the fork will be worth nothing because they wouldn't have any asset backing, and assets on the other side of the fork, the one that Circle chose, would be the ones that would be worth something. So that's kind of the I guess some of the kind of higher level existential type risks that kind of exist when you have large institutions or large users getting involved. On the next one, so how can we promote a deeper understanding of crypto as currency as a store of value? This one's, I think there's a lot of work you have to do here, and it's kind of there's a big kind of Lindy effect, as in things that are there for longer become more established. And so I kind of feel like Bitcoin's got there, and others have yet to get there. I obviously hope Ethereum gets there, but personally, and I think it will. But I think Bitcoin's probably the only real one that's got there. And honestly, this is kind of a time, just time and trust, and it's been built up over a steady time. And I guess there's a whole bunch of, in effect, community-led marketing and things. So, I think Bitcoin's been relatively successful around this whole like store of value or gold, digital gold. So, I think that kind of plays into it. So, this is kind of grassroots time, and there's no kind of quick win here. It takes a lot of time and effort.
Thanks, you. Let's move on with Mos's questions. Mos focuses on teams building for failure and looks beyond tech. I like the question. He asks, how can founders build resilience by designing for failure and by not just relying on audits or bug bounties?
Yeah, I think there's a lot of expertise in the industry now that and people try to do this. So I think there's basically security is like this, the Swiss cheese approach. Basically, you have lots of different layers, and each layer effectively has a hole in it, but hopefully not all of the holes line up, and you've got protection. So that's kind of the thing we should be thinking about. And there's always extra layers of security. Things like there's the monitoring systems, there's bug bounties, there's audits, there's a whole bunch of different things there that most of the high quality teams definitely use. In terms of like intentionally like designing for failure, like there's kind of this rabbit hole type approach where like you can always add on an extra layer and perhaps it makes the system more complex, etc. But I think one of the most important things is actually assuming that something fails, have a plan to respond to that. And I think that's where teams can get a bit better. At Nexus, we do have a plan. Not to say, obviously things could be perfect and more battle tested and things, and we haven't actually had to really kind of put that fully into place. But having a plan and knowing who's responsible for what. Like as an example, Nexus has an emergency pause function that a few members of the team can hit if there's deemed to be an exploit or a pending exploit or something like that. So there are things that teams can do. I guess personally, I think the general approach of teams has improved over time, but I would say that the earlier DeFi teams I felt were better at this, are better at thinking about this. The tooling is a lot better now, so things are a lot more, I'd say they're a lot more secure, but perhaps the approach or the focus on this on average has decreased over time, because I think the earlier teams were much more focused on like the threat actors and the really kind of hostile environment that you're deploying into, given that it's fully open and decentralized and anyone can hit any button. But I don't think there's any like specific answers here. It's just kind of a combination of a whole bunch of things that will improve things. But I like where the question's coming from, as in, if you put yourself in that mode, like something will fail. What do we do in that scenario, and how do we what are the fail safes, etc. we put in place? So yeah, good question.
Thanks, Moss, for the good question. Peter leads us back into the overlap between TradFi and DeFi, especially when it comes to insurance and real-world asset integration. Peter asks, what are the challenges and opportunities in bridging TradFi and on-chain insurance?
Yeah, so I think addressed some of these questions before, but from a slightly different angle, perhaps. So I guess the opportunities here are that there's a whole bunch of assets that aren't like native to a blockchain that you can put on a blockchain and make tradable across the globe. And I think that is just generally a really big opportunity. There's huge markets. I don't know the numbers, but like, the US Treasuries market or the real estate market, it's like there's huge asset classes that could be brought on chain, and things would be a lot more efficient and tradable, etc. And you'd find deeper liquidity pools. So I do think there's a big opportunity there. The challenges really stem from the best solution in terms of custody and legal to make it work properly and get the strength behind there so that the token holders actually have recourse, and how that kind of works. And then I guess a secondary challenge, which is kind of all wrapped up there, is going to be around the regulation and how that works, and is it allowed, and in what jurisdictions, and that type of thing, and how do you do that? Do you block people from certain jurisdictions where it doesn't work, etc.? So I think those are the kind of key challenges and opportunities. I guess, moving into the next one. So what types of real world assets are most likely to be tokenized first, and why? I think one of the biggest one happening at the moment, and it still needs to grow and scale, is like treasuries. I think stable coins has been very successful use case within blockchain, being able to pay people globally really quickly and efficiently. I think it's I get annoyed whenever I go back to the banking system to transfer an international funds. It's just ridiculous compared to how easy it is with the USDC or USDT. So I think that there's huge product market fit there. And the next most obvious use case there is going to be tokenized treasuries, where you can earn 3, 4, 5% or whatever on your savings, etc. And at the moment, there's a lot of legal and regulatory type challenges around that stuff, but it has started. I just think it's going to be gain a whole lot of scale. And then you've got a whole bunch of things like ETFs, real estate, etc. And so I think ETFs are going to be probably the next wave, and there's big investment banks like JP Morgan, etc. that are kind of looking at this type of stuff. And so I think that's going to be kind of the next wave. So question 3, why do people say that Bitcoin is decentralized given the crypto exchanges? So I don't think the exchanges, I don't think they're really that reliant on the exchanges. I mean, well, the exchanges is where you do most of your trading, because Bitcoin isn't really programmable. And so you can't actually build a smart contract or whatever and trade fully decentralized. You have to go to a centralized exchange to trade. And so, but that doesn't mean that Bitcoin isn't necessarily decentralized. It's got quite a few miners, etc., and you can argue what's more decentralized. Is it decentralized enough? It's definitely a spectrum, but I think I think Bitcoin is still decentralized and doesn't actually rely on the exchanges where a lot of the activity happens from a trading point of view, and a lot of the funds are actually held. Does not mean that the underlying network and the miners, etc., who are effectively the ones that decide on is there an upgrade or a fork or changes like that, that doesn't mean that they're not decentralized. So I don't think that the fact that crypto exchanges have lots of Bitcoin and trade a lot means that Bitcoin isn't decentralized.
Thanks, Peter, for the questions. Moving on to Jonah's questions, we're still hovering around the infrastructural side of things, and Jonah focuses on bridges and asks about bridge risks, which is a unique risk profile. One question is, yeah, why are bridges considered more risky than other dApps?
Yeah, so I think this is bridges at the moment generally rely on a multi-sig underneath, which is, maybe 3 or 5 or something like that. It depends on the particular bridge, where you've got all this tech that allows the bridging, but ultimately the assets have to be controlled by something to decide whether they come in or out. And therefore there's either a consortium or a multi-sig there of 3 or 5 people. And that's ultimately what the risk profile is. And so those types of multi-sigs have been targeted specifically because they're a big honeypot. If you get control of the multi-sig, essentially you can take all the money in the bridge. And the bridges get lots of money in them. And so they're definitely a big target, but from threat actors, in particular North Korea. And so I think that's been one of the reasons. The other reason is that bridges are newer relative to smart contracts systems in general, and so therefore the attack vectors and the stuff are still kind of being tested or battle tested in real time. And so I think just in general, the bridge risk has decreased because people have got a bit more understanding about where the risks really are, etc. And so things have been more battle tested. So I think the bridge risk is decreasing, but I still think it's relatively high compared to other types of apps. I guess switching gears a little bit, the second question is basically how anonymous do we want DeFi to be, and are there concerns about metadata which can be extracted from transactions? So I mean, DeFi at the moment is pseudonymous. Basically, it's not tagged who is what, but generally people can work it out if they've got enough tracking software to track the on and off ramps. And because then all the transactions are effectively public, then it's effectively it's not really anonymous at all. So I guess there's two kind of angles to this. There are a whole bunch of people in the world that would prefer every financial transaction to be public and be able to track everything and everyone. And so if you want that, you can effectively do that right now by connecting a few dots, pieces of information. And so then there's the other side of, we want privacy to, be a human right, and can we, and everyone should be able to do that. And then there's other concerns about money laundering and funding terrorism and all that type of stuff. So I'm not necessarily going to take a view on one way or another. I generally have some level of privacy, but I do acknowledge the other concerns. So if we're talking about the concerns about the metadata which can be extracted from transactions, I mean, I effectively think DeFi now is basically fully open, as in everyone can be doxed if enough effort is put in. And so it's kind of fully public at the moment. So to me, there is concerns from privacy. If we're talking about how do we get to a fully private DeFi situation, then essentially you're going to be either layering zero knowledge proofs on there somewhere, or you have like a kind of layer 2, which is kind of a fully private, maybe permissioned to start with blockchain, where only certain people that have been approved to KYC, etc., can use the system, and then you have a private transactions involved in that, and it's fully private. And so definitely there are some institutions that would prefer that. So privacy is, I think, a very big and tricky topic that blockchains are going to have to solve over the coming years, and it's probably more like a 5 to 10 year type problem than 1 to 2 years. So the technology is going to be there or in the next few years to effectively allow fully private stuff, but the question is that politically acceptable and all that type of stuff. So good question.
Thanks, Jonah. Risk and privacy aside, adoption is its own beast. Jeremiah is asking, Will adoption be driven by individuals self-onboarding or through familiar interfaces like banks?
Yeah, good question, Jeremiah. Don't really know, obviously, but my gut feeling is adoption is going to come through two things. One, the kind of DeFi mullet type view where basically individuals go through the banks and then the DeFi infrastructure is used on the back end. But they just look like normal interfaces that they're used to. I think it's very hard to change the kind of mass majority's way that they use technology. That takes a long time, and I think they're more likely to go through like banks. So I think it's more likely that banks or neobanks at the moment effectively replace their infrastructure with blockchain tech in the back end, and then they provide a similar experience from a user point of view to their users. So I think that's one angle. I think the other angle, which is definitely quite a bit of an unknown, but has a lot of potential, is AI agents. And I think it's entirely possible that instead of interacting with the blockchain directly, your AI agent interacts with the blockchain on your behalf and does what it needs to do. So blockchain is very well set up for AI because the AI can actually execute transactions on your behalf. Obviously, if you set the permissions and all that type of stuff up properly. But I think that's a potentially very interesting thing where AI can't really execute in the TradFi space, but it can execute in the blockchain space. So who knows where AI goes exactly and how we kind of incorporate it in our day-to-day lives. But I think that in the medium term could be a very big change that happens. I have to wait and see, obviously.
Thank you, Jeremiah. Next question is from Droege, bringing up a bigger issue, maybe the steep learning curve. How do we make DeFi usable without losing its core principles?
Yeah, this is definitely a challenging one. I think one of the just general high level problems here is that in some ways decentralization is kind of like insurance. In a weird way, it's like it provides you more resiliency. It's protecting against that kind of extreme type scenario where you've got a state level actor or someone very well funded comes and attacks the chain or something like that, and it only really matters in those types of extreme scenarios. And it's kind of like insurance in its case. You only need it when the worst happens, right? And so, do people want to pay for insurance? A whole bunch yes, but a whole bunch no as well. And like in some of it depends. So I think it's an interesting question. At the moment, I can definitely see a lot of teams and etc. sacrificing levels of decentralization to get adoption, whereas the early projects were definitely really, really focused on, this only works if we can fully decentralize it. And I think there's only very few projects that are kind of at that kind of, I guess, more pure extreme end of the spectrum now. Is that a bad thing? Well, I kind of think that you have to move some way. I think it's very hard to do everything fully decentralized. I think it cuts down the scope of what products and users you can attract. And so I think ultimately we need products and users of the tech. And I think it makes sense to have an underlying blockchain that is fully decentralized that can essentially be the settlement layer. But then you can choose, depending on what app or what purpose you're doing, what level of decentralization makes the most sense. Like if it's kind of bringing that back to the TradFi questions about like linking like real world assets and those types of things, ultimately you can't really link real world assets in a fully decentralized way. It doesn't actually make sense because there is some centralized or legal entity behind this thing. So I think that I think it's very difficult to do that. But I think sorry, Sam.
Yeah, I'm sorry.
Yeah, so I think it's very difficult to maintain full decentralization and get a large number of apps or projects. So yeah, I think that one's definitely quite challenging to do, and it's definitely a trade-off. And I think there's a certain amount of pragmatism that has to come into this.
Thanks, you. I also wanted to highlight one section of Droge's question because I thought it was quite interesting, and I was just writing to Hugh privately to say that I will read part of the question out loud because it's hard to read it when you're answering it at the same time. I think it's quite interesting. Part of the reason that the internet finally gained ground was due to a common set of protocols that all agreed to adhere to. I wanted to get your thoughts on this as well. We talk a lot about UX and various different kinds of standards that make it easy for people to better understand DeFi and maybe accelerate adoption. So yeah, I don't know. I think it would be great if we had like UX standards or any other interoperability standards. I just wanted to get your thoughts on this common set of protocols idea for DeFi specifically, and whether they already exist. And yeah,
I think they do already exist in certain places that make a lot of sense. Like, for example, tokens. There's token standards, and everyone can integrate any token because all the tokens are on the same standard or close enough. And so I think that's like a very clear one that makes a lot of sense. And it's one of the reasons DeFi has grown is because you have those common standards. I guess the other thing is like that I see happening are kind of intents, which is kind of like it's basically sign a message to say, I want to trade I want to trade one token for a minimum of 5 other tokens or something, and then someone else comes along and fills it, and it doesn't care where they fill it from. They come from they can work that out, and it could be on chain A, it can be on chain B, or whatever. And so I think ultimately we have the EVM is a pretty solid standard that's permeated throughout the industry quite a lot. We have token standards, and we have these kind of also intents are kind of getting there. So I do think at a technical level, there is definitely standards that have increased adoption. Can there be more consistency and stuff? Yes, of course. But I do think that this is kind of key in making it happen. I also would say that with the AI's potential happening, that the standards may matter a bit less than they did before, because the AI can interpret the differences and know. And so it can create a standard at a higher level, so that's again an unknown, not sure where it's going to go. But in general, I agree with you the thrust of the comment, because a lot of the success that DeFi's had has been because of underlying standards that have some provided consistency and meant that protocol A can integrate with protocols B, and protocol C can build on top of both of them and create a new product. And that composability aspect makes sense. So yeah.
thank you, Droge. Moving on with Lavi's questions. Lavi is mainly interested in keeping people and users ideologically invested in decentralization. And I think they're quite interesting. So, first question, how can decentralized systems keep people motivated to stay decentralized?
Yeah, and this is kind of the insurance question. So you kind of using fully decentralized systems often involves some trade-off. Either it's a bit more expensive to use, a bit more of a hassle to use, or whatever it is. There's some type of trade-off versus a centralized one, which is like fast and quick and all the rest of it, right? And so it's kind of like, okay, I would pay a bit more for security, but people find it hard to evaluate that. And so like, should I really pay more? I don't really care. I don't really understand, etc. And so I actually think this is a very important topic, because I want more people to be motivated to stay decentralized. I guess the pragmatist in me is perhaps a bit jaded now from this, that I think a lot of people just don't care. And should we have rules? I don't think rules are going to help. I think people will just it's a free market. People will do what they want to do and make the trade-offs that they want. And unfortunately, like, people will probably use the less decentralized stuff, and then something will go wrong. Not very frequently, perhaps, but it's at some point it will go wrong and blow up because it isn't decentralized, and then they'll suffer losses, and then what will likely happen is they'll go to the regulators, or they'll go to the courts, and they'll sue people, and then maybe after that there'll be some more regulatory rules come in place, because that's generally how things tend to work. And so then maybe those rules go too far and they impact everything, or maybe they're perfectly balanced and they say, well, hold on, it was this risk. It wasn't decentralized enough, so we'll target that and make it harder for those types of projects, and then give a boost to the more decentralized projects. I don't know, that's kind of a long time frame, 10-year type thing. But how do we fix things in the meantime? I honestly don't have any silver bullets on this one. I think it's a very hard problem, and it comes back to basically people want stuff that's fast and cheap and easy to use, and it's often easier to build that in a less decentralized way. Hopefully the people putting the effort in and building it in a fully decentralized way can make it so that you don't trade off the UX versus the decentralization or the cost. And as long as that can be closer, then hopefully the decentralized projects will win. So good question. Don't have any solid answers on it. I think it's a really tricky one. And I don't think rules should be put in place in general for this one. So yeah, I guess on your last point, which I don't think I addressed fully, how does decentralized networks share benefits better than centralized ones, even they're less efficient? I don't think those things necessarily equate, as in, I think the benefits can be shared if they're decentralized or centralized. It just depends on the structure. Decentralized networks tend to have this philosophy behind them that they share the benefits with the users more, but it doesn't mean they couldn't be implemented in a different way. So I think the decentralized networks generally require people to participate to make it work, where it can't be coded fully. And so the fact that they do that, they will usually pay a benefit to the people that provide that work to the system. And so in that way, they generally share benefits better. But it doesn't mean that you couldn't set up a centralized entity like that as well. So yeah, hopefully that answers your questions. I don't really have any solid answers on this one, to be honest. I think it's a very tricky problem.
Thanks, Hugh. I just wanted to mention here that we have a reading group on governance. And while we cannot directly still respond to questions like these, I think one good way to start thinking about these problems is maybe think about how cooperatives may be better structured for today's technologies. And also on Ethereum, if we were to have cooperatives, how would they look like, and what would we need? So yeah, I really enjoyed Lavi's questions, and I just wanted to encourage him or others to join the reading group if they're interested in diving deep. Okay, moving on to crypto accountants questions, and I'd like to suggest that this is the last question set we cover. We have 3 or 4 more that we can cover in the next episode of the DeFi AMA, if that's okay with you, Hugh. We're almost at time. So, Crypto Accountant asks, how might DeFi reshape auditing processes given the transparency of blockchain transactions?
Yeah, so I guess a lot, very shortly. I think this is one of the areas where it makes a massive difference. It's so much easier to just set up a whole automated auditing process that you can just track down the transactions, etc. And it's fully open. You don't have to. The auditors don't have to worry if they've got all the information or not. Obviously, there's stuff that's on-chain and off-chain. You have to do the off-chain stuff a bit differently. But for the on-chain stuff, you can just make sure that you've got everything just by getting the addresses. And then once you've got that, you can audit everything, and it can be automated even. And I know a whole bunch of tax software, especially for individuals, but also increasingly for companies, there are systems in place that basically just pull all the transactions in, categorize them, and give the whole do all the accounting, and you've got the auditing already in place, and so it can really be automated a lot more than stuff could be before, when you're kind of pulling stuff from different systems and making sure that things add up and all the rest of it. So I think it can do a lot on that side of things. On the educational stuff, I mean, definitely, I think universities and different courses should integrate, should add units, or consider this in their curriculums. I think that this is already happening in various places. There are specific courses. I know our chief legal officer, she's attending a blockchain and law specific course at the moment, and look, which is relatively new. I think they're running their first or second cohort. So a lot of this stuff is starting to happen now. Obviously, it takes a while for it to become established and for people to understand all the details and stuff. But I think it's definitely happening, and more units are coming out based on this, especially in the computer science areas, but also in more, I guess, more generalist courses or classes. So it's definitely happening at the moment, and you see people. I see people applying for jobs that have attended these types of courses and stuff already. So hopefully it will continue to happen even more.
Thank you, CryptoAccountant. I'm personally also looking forward to more blockchain and governance classes at universities. Okay, thank you, Hugh. We have 3 or 4 more questions, which I think we can cover with Brave New DeFi on the next episode of the DeFi AMA. Thanks again for your time and for your insightful answers to these questions. And thanks everybody for posting your questions. This is how we learn together, and I think it's a lot of fun. Hugh, any last words before we close the call today?
No, hopefully you found my answers useful. Obviously, I don't have all the answers here. These are just my particular views on things. But yeah, keep the questions coming, and hopefully you find that these answers useful as you learn more about DeFi.
All right. Thank you, Hugh. Stay safe in DeFi, everybody. Talk to
Thanks,
you.
everyone.
Bye.